Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
As we've been saying, the Sell America trade definitely gathering some momentum. Charlie, of course, just breaking down the numbers. Concern President Trump will act upon his threat of firing Fed Chair Jay Powell, implement policies then that could lead to a recession. President Trump reiterated his call for the Fed to reduce rates earlier today on Truth Social, writing, preemptive cuts in interest rates are being called for by many. That, again, Tim, of course, is President Trump's words.
Well, let's get to it. With us is a Bloomberg News economics editor, Molly Smith. She joins us here in the studio. Also with us is Columbia Law School Associate Professor of Law, Lev Menard, joining us from New York. Molly, I do want to start with you. In your world, how serious is it with economists and the like talking what feels like a threat by President Trump against the independence of the Federal Reserve?
I mean, it's definitely a serious consideration right now. And the way that Trump just keeps going after Powell day after day in all of these different tweets, whether people are taking seriously this idea of preemptive cuts, quote, being discussed by many, that is definitely refutable and not at all being priced in. I mean, there's a roughly 16% chance right now, looking at the Bloomberg Warp screen, of a rate cut in May, which is coming in a week or two. So no one's really thinking about that happening right now. And if rate cuts are to happen, people are saying that's because the economy is going to slow because of Trump's policies, not because inflation is slowing, like he claims. Yeah. Exactly.
Okay.
Professor Menand, come on in on all of this. The Supreme Court considering a petition from the president that could allow him to override some legislation establishing independent agencies such as the Fed and remove their leaders without cause or notice. What exactly is this case about? Why are we talking about it, especially since this case does not involve any Fed officials? And why is it, though, potentially so significant for the Fed, for Fed governors, and perhaps other heads of different organizations in the government?
So the Fed is one of many independent agencies in the government, and its 7-member board enjoy the same sort of protection from at-will removal by the president as other agencies, like the Federal Trade Commission, the National Labor Relations Board. And President Trump, in his few months in office so far, has already challenged the laws protecting these officials from removal at pleasure by the president. And those challenges, he removed several officials illegally. Those challenges are making their way through the courts right now. And the Supreme Court of the United States is currently considering a petition from the government, from Trump, to allow him to push these officials out of office until their cases make their way through the whole courts, which could be months and months. And that petition could be decided this week. And if Trump were to prevail, then he could go ahead potentially and fire the whole Fed board, not just Chair Powell, as soon as this week. And those officials, if they wanted to challenge those removals, would be out of a job during the pendency of the litigation.
Professor Menand, given what you know about the case, what you know about the arguments and the history, and of course the justices as well, do you have a prediction what is likely to happen if the Supreme Court rules one way or the other?
It's really hard to say, but based on the last segment, I think markets are really not pricing in the risk here. So already we have an administrative stay issued by Chief Justice Roberts in this case, Trump v. Wilcox, last week, which meant that Wilcox, who had been put back in her job at the NLRB by the lower courts, was taken out of her job while the Supreme Court considers President Trump's emergency application. That suggests to me that there are many members of the court who might consider granting this stay pending appeal on an ongoing basis. I think that there are members of the court who have expressed in prior cases real reservations about allowing the expansion of presidential power to touch the Fed. There's a desire to carve out a Fed exception. But the more uncertainty there is in this space, the more likely we would see President Trump potentially testing the boundaries. And so that might not mean a removal of Chair Powell, but it could mean a removal of Governor Barr, Governor Cook in the coming weeks.
Wow.
Whatever happened to checks and balances, Professor Manan? I'm just curious. We always just thought this government, how incredible, right? 3 separate branches, checks and balances. Are you, as someone who teaches, who studies, and the power of the Supreme Court, like, are we losing that? Have we lost it?
We are very much losing checks and balances. This is not a new thing. This is the culmination of 40 plus years of efforts to reconceptualize the presidency under the Constitution in such a way that Congress's laws attempting to constrain presidential power can be violated by the president. And Ronald Reagan was the first, really, to push this in 1981 when he took office, and there was a Democratic House, and there had been a Democratic House as long as anybody could remember. Reagan administration officials sought to assert presidential authority under the Constitution to do certain things that they didn't have the votes for in Congress. Those moves were ultimately embraced by the Clinton White House, and we've had a sort of ever-expanding conception that the Supreme Court has validated at several points, starting in 2010 with the Roberts Court decision in a case called Free Enterprise, which restricted the ability of Congress to protect the independence of the PCAOB, the board within the SEC that regulates accountants. We had a series of cases that validated more and more this once fringe sort of constitutional theory of the presidency. And now we have President Trump in his second term trying to do a full bear hug of this sort of this presidentialist theory. It's called unitary executive theory. And that is very inconsistent with traditional checks and balances.
Just to expand on this idea of checks and balances, it's not so much one that's afforded by the law and the different branches of government, but just within the Fed, something that I don't think we speak about enough with respect to who makes decisions on interest rates is that the chair of the Fed does not act similarly to the president of the United States. They don't have executive power to just unilaterally make a decision for the entire Federal Open Market Committee, which is comprised of 12 members, which includes the 6 governors on the board, which, Powell is one of those people. And to what the professor was just saying, that if Trump were to remove Powell, then that would also then set a precedent. Is he going to go after all these other governors? But again, this is a decision that on interest rates, it's set by this whole committee. It is not just by one person. And there would be some real credibility concerns if new people were to come in, that all of these other people who are on the board, or on the committee rather, who have been advocating for keeping interest rates steady, are they really just going to go along with this new person just because Powell was fired?
Look, I understand why the president wants interest rates to be lower. He has a background in real estate. He likes low rates. He's, we've talked about this in the past. But Carol, I would think that a leader of a country would want a strong, independent Federal Reserve because of the confidence it gives markets and because of the way that historically the U.S. has been looked at as Eric just told us, the central bank for the entire world.
Gold standard, like in terms of the U.S. central bank. And I do think about this, Molly, that if it's not just the Fed chair, but goes after the other Fed governors, that's a whole new ballgame just quickly.
Yeah, of course. I mean, we're talking about half of the Federal Open Market Committee right there if he goes after all those other people. So, and again, all of them are, the thing though that I guess maybe gives me some confidence is that no one is calling for these preemptive rate cuts. I don't know what economist Trump is going to find who is calling for that right now.
But it also plays into the game of instability if we constantly see this kind of movement. Sure. Both of you, thank you so much. Professor Lev Manan, thank you. Columbia Law School Associate Professor of Law joining us, along with our Bloomberg News economics editor, Molly Smith, right here in studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Spring meetings of the IMF and World Bank. We got Vice President J.D. Vance holding trade talks with India's Prime Minister. We've got the anecdotes from the Beige Book coming. The president meeting with CEOs of major retailers to talk tariffs. I didn't even mention anything about earnings, which we're going to get to later in our program. But that's kind of like the backdrop, Carol, for
It's a busy week.
Yeah, what's happening?
Yeah.
Spring break's over.
Spring break.
Spring break 25.
Move on.
We're also seeing a sell-off in U.S. assets as the president stepped up criticism of Jay Powell on social media. We just got the details from Charlie, but the S&P 500 still down 3%, though, off its worst levels of the day. We got a great roundtable to help us make sense of what's happening in the global economy right now. Stuart Paul is U.S. economist for Bloomberg Economics. Enda Curran is global economy reporter for Bloomberg News. Stuart joins us here in the studio. And joining us from Washington, D.C. Stuart, we've got longer dated treasuries joining stocks, the dollar deepening its slump. What is concerning to you and what's not concerning to you when you look across what's happening in the markets and in the economy?
The thing that's most concerning to me is that the U.S. is basically retreating from the existing global commercial order. Just this series of arrangements that we have for trading across borders, for engaging with our allies and giving them favored treatment, giving them access to U.S. markets. We're retreating from that role.
And you're seeing that with the dollar slump?
And and where it's being reflected in markets is in the dollar slump.
Okay.
Because as the U.S. is retreating from the global commercial order, folks are starting to get a little bit worried about whether they should hold dollar-denominated assets, period. Usually, if there were a recession, there could be a haven bid for something like treasuries, and you wouldn't see the sell-off in treasuries at the same time that you're seeing the sell-off in equities, which is being most clearly expressed by dollar weakness. Again, that retreat from U.S. dollar-denominated assets. So it's that dynamic that has me most fearful right now. The thing that I actually find heartening is that as an economist, I just have this deep and profound belief that people do not stay irrational. Irrationality cannot persist. And so when you suffer the consequences of poor policy decisions, eventually you reverse course. So just as I am frustrated and discouraged in one moment by exactly what we're seeing in markets, maybe it's that economics bone that just kicks in and keeps me from being totally perplexed in perpetuity.
So, Enda, do you share Stuart's, I guess, enthusiasm that we could get kind of
Stuart's not hiding under his desk right now. Let's just put it like that.
That we'll ultimately get a course correct, that things kind of find their way in the right way? Or I'm curious if you agree, but is it also depending on when that course correct happens? Because a lot of damage can be done to the U.S. economy, the global economy, and the U.S.'s standing in the world the longer this goes on.
I think Stuart has set the table very well there. I mean, for example, this week, Carol, we will have all of these finance officials, economic policymakers from around the world visiting DC, and it's going to be useful for two reasons, to your point. The first is we'll get a temperature check in terms of how much economic damage is being done, how real is the pain for their companies, for their exporters, for the trading partners of the US, and how are they viewing the US as the guardian of the global economy by extension of that. So we're going to get a good temperature check in terms of the perception and US reputation in all of this through the comments we'll get over the coming days. We'll also obviously get new growth forecasts from the IMF that will put numbers in terms of what damage people see. But then the other part of this week we'll also see how much of this can be undone. To your point, will there be scope for deals? We'll have lots of finance ministers here, and will they come out and say, yep, we spoke with the US officials, we see a way out of this, and XYZ might come out of it over the coming weeks. That's an optimistic take. Or might we get more fractious comments making the point that, look, there's no easy way out of all of this. Tariffs are easier to put on than take off, and the mood might be more sour at the end of the week than it is beginning. So I think in terms of how this all plays out in the world economy, this week is a pretty unique one given the amount of visitors coming to DC, and I think by the end of it we'll have a sense both of US reputation and the role in stoking this, and if there's a way out, near term at least.
And what does, you mentioned the potential for deals, and maybe we'll start hearing about deals. Look, it depends on a country specifically, but what could a deal look like with a trading partner, for example?
Yeah, look, as you say, a lot of specifics we don't yet know, but broadly speaking, President Trump talks a lot about not just tariffs, but non-tariff barriers. He talks about exchange rates, he talks about subsidies, he talks about IP theft. He had a figure, I think, of $1 trillion worth of loss to the US economy from copyright and IP theft this morning. So one would assume these are the topics on the table alongside tariffs. And you'll have to see now the finance ministers coming here, and some of them will bring their trade officials who will presumably be putting something on the table, providing the US has specific asks. But remember, there's two ways of looking at this. If you want to call it the war lex China, maybe not. There's scope for some deals there. I mean, the signals from Japan last week were more mixed than the signals President Trump sent. The EU has sent some fairly mixed signals. But let's just say there's some scope for a meeting of minds when it comes to the US and the rest of the world ex-China. But none of that solves what will come after it, which is the big piece in all of this, the 145% tariffs on China. I mean, that's a whole other story. No hint of negotiations kicking off there. And I can't imagine we'll have much progress on that here in DC in this week either.
Sometimes it's good to be in a category all your own, and sometimes it's not, certainly when it comes to tariffs. Come on back in, Stuart, because what is it that the Bloomberg Economics team, how are you looking at the U.S. economy? Recession, no recession this year? A lot of people are also talking about 2026 and some downbeat expectations. I think we got a little bit of that from some of our earlier guests. So I'm just curious how you guys see it.
We don't yet have a recession in our immediate forecast window. We are expecting material slowdown in growth, full year growth.
Will it be so slow that it'll feel like a recession?
It's definitely possible. The contour of how it feels is going to change throughout the year. For example, this year, or in the first quarter, we're front-loading imports. So one of the major items that's going to be dragging on GDP growth is imports. It's not necessarily going to be consumer spending and fixed investment. As we start getting into the summer, I think it's going to hurt quite a bit more, where folks do start pulling back. As Gina was saying, a lot of companies are reporting disappointing top-line numbers already. That was in the first quarter. That's part of why we do think that fixed investment is going to slow in the middle of the year. Firms didn't realize that revenue in the first quarter, so investment plans are going to slow in the middle of the year. And when investment plans slow, so too does hiring. So as we get into year end, we're expecting to see 5% unemployment, but we don't think it's until we get to basically that point that the Fed would then step in with another rate cut. We think that the Fed is going to stay pretty laser focused throughout most of the year on the price stability objective within its dual mandate before offering any sort of relief in the fourth quarter.
And one more for you, Stuart, on unemployment, and I want to bring Enda back in here because he's got a great story out today about the immigration crackdown compounding into blow from tariffs. But how would you characterize a rise in unemployment right now at a time where we're actually seeing immigration slow down?
Well, you have a few different dynamics. The first is the availability of labor supply. So if you have less immigration, then you're going to have relatively less labor supply. And what really matters, though, is less immigration, less labor supply. Is the existing supply going to be absorbed by firms' demand? And it's that balance that we're looking for, right? And right now, we are seeing waning demand for labor. We're starting to see less wage pressures emanating from the labor market. Right now, the ratio of jobs that are available to the number of unemployed workers is below that which persisted pre-COVID when core inflation was running under 2%. So the feedback that we're getting from the labor market into price pressures just isn't there. The labor market is cool. The price pressures that we're seeing right now are from under saving and from the supply side.
So, Enda, come on in on this because we had a really interesting conversation earlier with Thomas Carroll. He's over at Ballast Rock. They focus on multifamily in the Sun Belt. And he mentioned that he's already seeing prices of stuff they import to build these multifamilies go up as a result of tariffs on Canada and on Mexico, so those raw materials. And then also he's speaking to subcontractors who are having trouble finding talent when it comes to those skilled trades to actually do the work and get it done. So he's sort of hearing and feeling this on both sides. How does that kind of compound with what you and the team wrote about today?
Yeah, I mean, there are definitely many aspects to this, as Stuart just mentioned. But just to put it on a headline basis, the surge of immigration over the past few years was considered to have been important to offset labor shortages, keep a lid on inflation, and help the economy avoid recession. Now, the concern at the moment is that even before we get to the mass deportation phase, that the big crackdown on immigration, business people and economists are not advocating for illegal immigration or chaos at the border per se, but the end result has been a big crackdown on immigration. The concern is that some of those sectors, like construction, for example, are going to struggle to find workers. Some of those most exposed for those kind of labour-intensive jobs, maybe in food processing sector, in the farming sector, for example. Those are areas that are going to find it hard to get workers now at a time when they need them. So that concern is there, coming on top of the tariffs. But of course, as Stuart was saying, the bigger picture is the employment market is slowing too, of course, and that will offset some of those pressures.
Just quickly to wrap up in 20 seconds here, and I mean, if the U.S. goes into a recession, should we assume that the global economy will also go into a recession? Just quickly.
Definition of a global recession is quite difficult. I defer to Stuart, but if the US is in a recession, that's not good for the world.
All right, the ball's in your court, Stuart. If we get a U.S. recession, should we assume a global recession is coming?
There's been so much stimulus that's been put forward in the rest of the world. I think it's possible that enough stimulus in China and Europe could stave off a more material recession. But you know how it is. As the U.S. goes, so does the rest of the world. So if we do enter a U.S. recession, it would be difficult for me to be along Europe, for example.
It makes me wonder if we could once again have an earnings recession, but not necessarily an economic recession, because Gina talked about the numbers being brought down, certainly for the rest of this year, but also starting to look at, I guess, the early part of 2026. Folks, thank you so much. Stuart Paul, U.S. economist for Bloomberg Economics, and Enda Curran is global economy reporter for Bloomberg News. Stuart here in our New York studio, Enda out there in D.C. Guys, thank you so much.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is today's big take. It's also one of the most read stories on the Bloomberg terminal. It's about the self-described boring budget guy who's best known for co-authoring the 900-page policy playbook of the Heritage Foundation's Project 2025. It's become something of a Bible for President Trump's second term. And it's he, not Elon Musk, who's steering the Trump administration's Doge crusade. Businessweek columnist Max Chafkin writes about Russell Vogt for Bloomberg Businessweek. He's also the co-host of the Elon Inc. podcast and the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He joins us from our Dallas bureau. Max, who is Russell Vogt?
Yeah, Russell Vogt, well, he is the director of the Office of Management and Budget. But more than that, Tim, as you said, he is one of the core ideologues behind this presidency. So Russ Vogt, he served as the head of OMB at the end of the last Trump presidency. And his big idea really goes around executive power. And it's this idea that the executive, that's the president, Donald Trump, should be able to have much, much wider discretion to run the government and really to run the country than I think most, even either Democrats or Republicans, have generally allowed in the past. He's also a big time deficit hawk. He started his career working for Phil Gramm. He was a senator, starting in the 80s, was one of the key people behind the effort to balance the budget in the 80s and the 90s. And so Vogt has these two threads, one deficit hawkery and the other being executive power. And as you kind of hinted in that intro, those two things work really nicely with what Elon Musk is trying to do. Because, of course, Doge is about both of those things. It's about cutting the deficit, but also sort of doing things more aggressively, with the power of the presidency. And so Vogt and Elon Musk have this kind of interesting alliance. And it's especially interesting because they're so different. They couldn't be more different from one another.
All right. So having said that, we focus so much on Elon Musk. He's been the face out there in public in the Oval Office when Donald Trump is holding, the President Donald Trump, of course, is holding press conference about what Doge is doing and so on and so forth. So I guess there's an assumption that once maybe, there's been some speculation that maybe Elon Musk, his days at Doge are numbered, that's it. And yet that's not the case, is it? if that's how it plays out.
People within the Trump administration definitely don't see it that way. I mean, as you say, Carol, at some point, Elon Musk is going to have to give up his full-time role in the Trump administration because he is a temporary government employee. That is going to sunset after 130 days. We don't know exactly what that'll be, how exactly they're counting the days, and it would not surprise me if it stretches on. But at some point, Musk is going to take a step back, and certainly within Trump world, this is seen as being part of Russ Vought's domain, and that he and people around him are ready to pick up where Elon Musk left off. And it's not as if I don't think Elon Musk is going to go away from the world of Trump. I think he'll still be very vocal on social media. But when you're talking about that day-to-day role, it will go away. And if you're thinking that Musk going away is going to change the trajectory of what Trump is trying to do, I think you would be mistaken, because Russ Vogt has been working on these issues for years, long before Elon Musk proposed the idea of Doge. Vogt was proposing sort of very similar things from his perch as the head of this, MAGA think tank, as being one of the kind of leading lights intellectually in Trump world.
All right, and as you talked about, I mean, he's very different than Elon Musk, and so I do wonder, what's the speculation about how these cuts and things might play out if Elon Musk leaves and Vogt he's in charge?
Yeah, the difference is it's almost comical. So Musk, of course, he loves to be front and center. Vogt, very low profile, barely talks about himself. Rarely gives interviews. Rarely gives up any personal information. We know everything there is to know about Elon Musk's personal life. Musk, of course, ideologically scattered. Vogt is very, very disciplined, and that. You could see that in two different ways. On one hand, I think there's some people who see Musk kind of working against Vogt and some of the ideological components of Trump's base. On the other hand, Vogt and people close to him see Musk as this kind of force multiplier, as this face of this otherwise maybe difficult to sell operation. You have this very popular, out there guy in Elon Musk representing these changes in the public. Meanwhile, behind the scenes, you have Russ Vogt and his allies doing the actual work.
Well, so what have they been able to accomplish thus far? Because Project 2025 was brought up during the campaign quite a bit, in fact, by Democrats. And the president at that time distanced himself from Project 2025. What have they been able to accomplish?
Yeah, there's a lot there. I mean, Project 2025 has a large number of co-authors in terms of, and they're different positions. Like if you look at the tariff section of Project 2025, there was a pro-tariff section and an anti-tariff section. They're actually two dueling proposals. Vogt is pretty much aligned with Trump on everything. So he was for the tariff. He was publishing, these very hawkish pieces about tariffs in the years running up to the election. And in terms of sort of executive power, this idea that Trump should be able to run the government, I mean, that is a place where they're making a lot of changes. I mean, we're seeing, some of this is caught up in court right now, and it's unclear how many of these attempts to, drastically close or reduce the size of federal agencies, how much of that will stick. But in the story, we talk about the CFPB. That's the Consumer Financial Protection Bureau. Vogt is also running the CFPB. And right now, this is locked up in court. It's not clear what's going to happen. But when you talk to people who work there, I mean, nothing is happening right now. The agency has not been shuttered, but it also is clear that its ability to do stuff has been drastically reduced. And so in that sense, he's done a lot. That said, there are the questions around, how much of this is gonna stand in court, how much of it will, stand up to congressional scrutiny, a change of power, and so on. So the jury's still out there.
Well, before the jury was even out there, our team spoke to Kevin Roberts, the president of the Heritage Foundation. That was back just after President Trump won the election. This was on November 11th. He was on Balance of Power. Check out what he had to say about the opportunity that he saw then.
We think that this is the beginning of a golden era of conservative reform. I will say that because the work of Project 2025 represents the conservative movement, it would be very difficult for anybody to implement policies on education, on the border, on taxation, without at least consulting those ideas and people. That's not some arrogant or hubristic comment on our part. That's just the nature of how policymaking works.
That was Kevin Roberts, the president of the Heritage Foundation, back on November 11th, 2024, joining us on Balance of Power. Max, when you think about this term versus Trump's first term, are there ideological differences because of the influence of the Heritage Foundation, of Project 2025? Do you see differences in the way that he's making rules or the way that he's putting policy into effect? Do you see it?
For sure. Now, I think the difference is that during the last Trump presidency, Trump came in without this kind of broad base of support. It had been a closely contested nomination. There were a lot of competing factions within Trump world, and in particular, you had this kind of business faction, right? That was pushing against some of these policies that we've been talking about a lot. Whether we're talking about tariffs or various erratic behavior on the economy. And what's happened instead is you have this kind of base of committed ideologues who have spent years preparing for this moment. That's what Project 2025 was all about. It was like, the last time we had this, as they see it, this like deep state that was thwarting them. Now we're going to figure out how to actually do stuff. So what they're trying to do is avoid the kind of checks of these more moderate factions within Trump world. And Vogt is a really interesting person here because Vogt was kind of dead center of some of the biggest controversies of the last term. So Vogt was involved in holding the money up, the aid to Ukraine up. That happened through the Office of Management and Budget. Now that led to obviously an impeachment hearing and everything. As Vogt saw it, that was the deep state, trying to stop Donald Trump. So there's a lot of ways in which the guys involved with Project 2025, including Russ Vogt, have been sort of preparing for this moment for years. And I think that's one of the reasons this presidency has been so much more hardline ideologically than the previous one.
Well, that's what I find interesting. You go into some great history about his time working for Senator Phil Gramm. I mean, pull out your political history books, but Texas Republican, fiscal hawk, and you say he certainly had quite an impact on Vogt in terms of where he got that from. But I think what's really interesting is, this idea of these views on executive power. I mean, I think is what's so fascinating, right, about this second Trump term, consolidating executive power like we've never seen before. And he certainly is helping the president do this. And forgive me, we've got about 50 seconds here, Max.
Yeah, and that's certainly where these kind of libertarian Phil Gramm has a long and interesting career, but I'd say he's more of the sort of libertarian bent than somebody like Russ Vogt, and that's where the difference is, right? Whereas a lot of these deficit hawks, the old line deficit hawks, were really interested in Congress as the forcing function. For Russ Vogt, it's the executive. It's kind of clearing the field and letting Donald Trump have as much leeway as possible. Of course, critics are going to say too much leeway. We're bordering on an imperial presidency. And so that's the kind of like ideological conflict that's playing out behind the scenes, as Trump does his thing.
Yeah, it's just, fascinating, a story like yours, the people that are so instrumental in shaping what this Trump term looks like. Just really amazing stuff. Max, thank you so much. Really appreciate it. Max Chafkin, columnist at Bloomberg Businessweek, co-host of the Elon Inc. podcast. Check out his story. This is on the Bloomberg, coming also in the new issue of Bloomberg Businessweek magazine. You can find it at Bloomberg.com too.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
I love watching kind of the last hour of trading because we'll see if this holds, but definitely off our worst levels of this session. But you were just looking at the S&P too. I mean, we've seen broad-based selling throughout the day, but right now you've got, it's only 22 names that are actually higher in the S&P 500, 481 to the downside.
Good luck to you on those.
Fingers crossed, fingers crossed.
Hey, I want to see what Jeff McClain has to say about this. CEO of Solidarity Wealth. He joins us here in our Bloomberg Interactive Brokers studio. In the wealth management business, they've got just under $700 million in assets under management. Jeff, good to see you. Welcome back.
Thanks.
When you walked in, you actually mentioned that you were seeing some buying into the close.
Yeah.
Taken together, everything we've seen over the last few weeks, what does the environment look like to you right now?
Obviously, the sentiment is so negative. I think that's part of the frustrating thing because the data is not there to support it. You're seeing consumer sentiment surveys down at like 2008, 2009 levels.
Yeah.
Do I think it's 2008, 2009? I do not. And so that's part of the surprise a bit of how
Because you think
negative.
it's worse?
No. I definitely, can you imagine?
Why are you so optimistic? We can go over the list of concerns that people have. Today, top of mind for folks is fear about the independence of the central bank here in the U.S. and what the president has said about the chair of the Federal Reserve. There's the tariff concerns as the president meets with some of the heads of the big retailers at the White House today, and the concerns about, as we heard from Jay Powell last week, prices rising as a result of these tariffs.
Yeah,
and growth slowing.
There's a common denominator to everything you just said.
Tariffs?
Which is President Trump, right? The Trump administration. And so a lot of this, it's not based on some market fundamental. It's not based on something broken like in 2008, 2009, the housing sector and credit default swaps and all the issues that came up through that. It's all based on what's coming out of the White House. Well, and so that's why I'm both nervous, but also excited long term, because there's nothing fundamentally broken right now. It can be cleaned up. Now, how he's going about it's not ideal, and it's freaking out people. It's creating uncertainty, which is the buzzword like we're talking about as a firm. Uncertainty is killing the market right now. And you can point to any of those policies you just said. That's what's driving it, is people don't know what's happening next.
I just want to remind you, we're 3 months into this administration.
Yeah.
And these are 4-year terms.
Yeah. But I do think there is a long-term plan associated with tariffs of, again, it's a shock and awe he's going into. I think long-term, everyone but China, I think those tariff issues get worked out here over the next 12 months. China, I think, consistently will go for the life of his presidency, that trade war, trade battle issue. Yeah.
Like 145% tariff for the whole presidency?
No, I think they'll be fighting over trade policy the entire time. President Xi, President Trump are going to be battling because he has this fundamental view, President Trump does, of how unfair they are. Now, whether you agree with Trump or not, the data is pretty clear that China has been very lopsided in their trade policy of anti-U.S., stealing intellectual property, and doing a variety of different things to hurt us. But I think over time, again, a lot of this can be corrected by President Trump. That's why I'm a little bit bullish, because it's, again, nothing's broken right now. But it can lead to disaster. That's where he's on a dangerous game right now. Consumer sentiment is so negative that unless it turns, this will lead to a recession, without question. It has to turn, or we're in a recession.
Having said that, if we are seeing, though, ultimately, even if trade deals are worked out, and there are tariffs on goods that come into the United States, higher prices for Americans, right? And that changes the dynamic of potentially with the U.S. economy, right? People have just so much money to play around with. So something will be cut back on potentially. And that changes kind of the composition and velocity within the U.S. economy. So even though a deal might be worked out and we cross that off the list, you come back to different fundamentals.
Yeah, and it really depends on the type of deals, right? Even the 10% tariffs on all the other countries are a problem, right? And so if he can...
10% maybe sounds like not a lot, but what we're at, 2%, 3%? That's a big jump.
But if he can wipe out, as part of this, again, it's not to go too much into the political side, but if he can wipe out the tariffs that they have on us and all the other non-tariff trade policies going country by country, that can be a huge boom.
This is the Bloomberg Businessweek Daily Podcast.
His short term could drive us into
Apple,
a recession.
Spotify,
and there's no way
you get
a
your
Republican's
podcasts.
being reelected
Listen live
in 3.5 years
from 2
if
to
he
5
drives
p.m.
us
Eastern
into a deep recession.
On Bloomberg.com.
That is gone. So I think he's playing it.
But is that the concern or the recession that's on the U.S.
You can also watch us live every weekday on YouTube.
His concern or my
his concern is, I think about the longer term damage, right? of, do we have another generation that comes out of college and can't get jobs? And that means you can't buy houses and you've got student debt. Like I do wonder, when do we move towards thinking, all right, folks, there's going to be some longer term impacts on certainly Americans and the American economy.
Yeah, I think the American economy, and specifically around like job market, I think those always turn in a positive manner over time. The issue long term to me is the international view of U.S. investment. That is concerning, of where my worry lies of long term, especially around the treasury market. So if you're a person coming out right now, or just an average worker trying to get a new home and get a mortgage right now, good luck, right? Your 30-year average is starting with a 7 handle roughly, right? That's really high than what we're used to. A lot less than what our parents paid, right? Double-digit mortgage rates, right? But like still, that is a difference maker. And so I think that's why he's trying to beat down the Fed chairman a little bit in inappropriate ways to get those mortgage rates down, because he knows if he has a slowdown in the stock market and the cost of buying a house is high, jobs start being few and far between, he's creating a tempest to fight through.
Speaking of beating down.
Yeah.
Segue to Novo Nordisk.
Yeah.
A stock that has been beaten down, but you're optimistic on and you've taken a position in.
Yeah, we took a position last week. We like Novo for this. It's back down to almost its pre-GLP-1 level.
That's wild.
Right?
That's a huge decline. I mean, we were reading stories in the last couple of years like, this is Denmark's economy.
Yeah.
Truly.
Yeah. Yeah. And the thing is, the fundamental business that they already had, diabetes, insulin, not going anywhere, right? As the world gets wealthier, diabetes, insulin, obesity, all those things go up. And so you're basically getting the GLP-1 business for free right now, because it's back down to roughly pre-GLP-1 taking off levels. And so for us, down nearly 60% year over year, still a great management team. I think there's plenty of space to be had in the GLP-1 market. Everyone's looking at Lilly right now as the clear leader. I think there's plenty to be had there. We're still in the early innings of GLP-1, remaking the health area and having people.
But is it contingent that they are able to create a pill just like Lilly?
I think there's going to be a lot of innovation there. I'm not worried about the method of intake, whether it's a pill, a shot, whether it's something that dissolves in your mouth, right? Whatever, a patch. Like, I think the method of intake is less concerning to me. It's more just the business itself. And Wegovy has staying power. Right. And so I'm getting it for free, essentially. I'm buying the diabetes insulin business, and we're getting GLP-1 for free. I mean, that to me is marketable. The management team is good. I trust the Danes. Right. We'll see what they can follow through on, but they look good.
We got to run. Thank you so much.
Yeah.
Good to spend some time. Jeff McLean, CEO of Solidarity Wealth.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.